Welcome back to Aither Insights. It feels like it's been a little while, but we are absolutely thrilled to be back.
Yeah, definitely good to be back.
We're here bringing you the sharpest market analyses on, the most important regulations and evolving topics in the environmental markets.
Absolutely. It really has been too long, and we've missed digging into these crucial subjects with you, our listener. We're excited to jump right back in today.
Me too.
And we've got a topic that isn't just reshaping the voluntary carbon market, it's fundamentally redefining its very purpose.
Right. Today, we're unpacking what we're calling the integrity revolution in the carbon market. And this isn't just like minor tweaks.
Right.
It's a really profound shift centered entirely on carbon credit quality. And it's driven by the biggest trend we're seeing, the market's dramatic flight to quality.
That's spot on. I mean, for years, the voluntary carbon market faced, let's be honest, a relentless torrent of scrutiny. Some of it was, frankly, well-deserved. But now we're seeing this powerful, almost overwhelming consensus emerging. Buyers are prioritizing high-integrity credits above everything else.
And they're willing to pay for it.
Exactly. And what's truly fascinating is that they are demonstrating a clear willingness to pay a significant premium for them.
So our mission today is really to cut through some of the noise and answer a critical question. Beyond the hype, what determines a high-quality carbon credit in 2025?
Yeah.
We'll explore the new foundational principles, the practical impacts for project developers and buyers, and, most importantly, what all this means for you navigating this space.
Let's do it.
Okay, so this flight to quality, it's more than just a buzzword, isn't it? What exactly does it signify, and I guess why now?
Yeah, you're right. It's definitely far from just a buzzword. At its core, this flight to quality is about, a desperate scramble to restore trust and credibility in a market that, for a time, felt really plagued by accusations of greenwashing, overstated impacts, even things like phantom credits.
Right, those headlines are everywhere.
Exactly. So it's a necessary, profound supply-side reboot. Buyers, having learned from past issues, are now incredibly sophisticated. They're demanding genuine, verifiable impact.
Okay.
And that's leading to this seismic shift towards projects with undeniable high integrity. It's really a make-or-break moment for the entire VCM. Only the truly impactful projects are set to survive and thrive. And that could potentially leave a vast number of older, maybe less credible projects kind of stranded.
That really paints a vivid picture of the stakes. And this isn't just wishful thinking, right? We're seeing actual frameworks emerge to define this quality.
We are.
And here's where it gets really interesting for anyone involved. The core carbon principles, or CCPs, they come from the Integrity Council for the Voluntary Carbon Market, the ICVCM. What makes these principles such a potential game changer?
Well, the ICVCM stepped into a really critical void. The market needed a definitive, universally recognized standard to restore that credibility. And their core carbon principles are designed to be precisely that indicator. They aim to ensure credits represent real, measurable, and additional emissions reductions or removals.
Okay, the additionality piece is key.
It's crucial. It prevents the kind of double counting or overestimation that really eroded confidence in the past. You can think of them as the emerging gold standard for what a carbon credit should represent.
This really promises to transform the VCM then, by providing an incredibly clear signal of high-integrity credits, fostering greater confidence, and, crucially, leading to more streamlined trading instruments. Because we're already seeing major platforms launching standardized contracts specifically aligned with these principles. They're aiming for much more transparent price discovery than we've had before.
And we're not just talking theory here. These principles are rapidly being put into practice. I mean, a great example is Gold Standard, a real leader in high-integrity climate action. They recently had a significant number of their clean cooking methodologies officially accepted as CCP eligible by the ICVCM. And this isn't just some technical approval. It's a powerful validation. It confirms the genuine environmental integrity and the climate impact of those projects.
That gold standard approval really feels like it validates the practical application here. What do you think this signals for other project types currently seeking that CCP label? I mean, this specific approval covers 185 registered projects, issuing nearly 3 million credits across Africa, Asia, Latin America.
Yeah, it's huge.
It's a massive tangible impact.
It's a powerful signal, definitely. It demonstrates that the bar is high, but it is achievable for well-designed projects. And it's not just cook stoves. Vera,
Another key player.
right, another key standard setter. They've also released updated guidance for applying CCP labels to their verified carbon units, their VCUs.
Okay.
They've approved a range of methodologies, things like afforestation, reforestation, and revegetation ARR, which are crucial for measuring long-term forest carbon sequestration. And also updated approaches for reducing emissions from deforestation and forest degradation, REDD plus house.
Okay, the attention to REDD Plus feels particularly important given its, let's say, checkered history sometimes.
It is.
These projects aiming to reduce deforestation emissions, they faced intense scrutiny over those phantom credits because of potentially inflated baselines in the past. How are the CCPs and these updated methods tackling those concerns?
It's a critical point. The ICVCM has approved updated REDD plus methodologies that specifically emphasize a shift towards jurisdictional scale programs.
Jurisdictional, okay, meaning?
Meaning focusing on efforts that cover entire regions or states, not just, isolated, maybe smaller scale projects. This broader, more holistic approach is designed to provide much greater transparency and accountability. It makes it far harder to inflate baselines and significantly improves the market's credibility for this really vital project type.
So the market is actively learning?
It has to. It's how it's building a more robust future.
So it's clear then, the CCPs are about rigorously verifying the carbon integrity, making sure those tons of CO2 are real, measurable, additional. But when we talk about true quality, isn't there more to it beyond just the CO2?
Oh, absolutely. You've hit on something really crucial there. What's truly fascinating is that these high-quality carbon credits, they often offer unique, multifaceted benefits beyond just the emissions math.
Okay.
These are what we call co-benefits. And they speak to the profound positive impact a project can have on local communities, on people's livelihoods, on biodiversity, on the wider environment.
This is where the story gets really compelling, isn't it? Connecting climate action to tangible improvements people can actually see and feel.
Precisely. It makes it real.
Can you give us some vivid examples? How do these co-benefits play out in practice?
Yeah, definitely. Let's go back to those gold standard certified clean cooking projects we mentioned.
Okay.
They do so much more than just reduce emissions. By replacing open fires or inefficient stoves, they dramatically improve indoor air quality.
Right, which has huge health implications.
Huge. It directly translates to better health outcomes, especially for women and children who tend to spend more time near the hearth. They also ease the economic burden of buying or collecting fuel.
Freeing up time and money.
Exactly. Freeing up household income and, critically, time, particularly for women and girls. These are direct, measurable improvements in health, gender equality, economic development impacts that resonate far beyond just a CO2 metric.
Or you could think about nature-based solutions like reforestation projects, obviously vital for sequestering carbon. But beyond that, they actively enhance local biodiversity by restoring habitats, they improve soil health, they build environmental resilience against floods or droughts.
That resilience piece is increasingly important.
Totally. Or even initiatives improving sanitation or deploying small-scale renewable energy in underserved communities. They cut emissions while also generating tangible community benefits, like preventing disease or providing reliable light and power.
This holistic view, it really encourages critical thinking, doesn't it? It prompts you to ask, how can my carbon investment deliver impact above and beyond just mitigating climate change, especially when taking responsibility for unavoidable emissions?
Yeah.
It's about leveraging that climate finance to drive broader, sustainable development goals.
Which leads us straight to the market dynamics. If buyers are prioritizing this quality, this integrity, these co-benefits, and they're willing to pay a premium, how is that actually playing out? Are we seeing a real price difference, or is it still mostly talk?
No, it's definitely translating into the market. High-integrity credits, the ones reflecting genuine emissions reductions and adhering to robust frameworks like the CCPs, they are commanding premium prices.
Okay.
This isn't just theory anymore. It's creating a powerful financial incentive for investment in truly quality projects rather than just, the cheapest available credit.
So the market is starting to put its money where its mouth is. What does the latest data tell us about these trends? Is it clear in the numbers?
Oh, the data provides compelling evidence. Get this. Despite an overall 25% fall in transaction volumes across the whole voluntary carbon market in 2024.
Which sounds like a drop.
It does, but credit prices only declined by about 5.5%. And perhaps even more remarkably, retirements, that's credits actually being used to offset emissions, held fairly steady at around 182 million tons.
Interesting. So volume's down, but prices and actual usage holding relatively firm.
Exactly. It's highly indicative. It strongly suggests that the underlying demand for trusted credits, for high-quality credits, remains really resilient, even amid those broader market pressures and the skepticism that was so prevalent just a couple of years ago.
And looking bigger picture, the total market value is still way up compared to a few years back, right? Like 1.9 times higher than 2018.
That's right. Primarily driven by the strength of those relatively buoyant prices for the quality end of the offset market. It really shows quality is underpinning the market's sustained value.
What about differences between credit types? Are we seeing clear divergences there?
Oh, hugely. A key finding supporting this is the significant price divergence. Credits representing emissions removals.
Like planting trees or direct air capture.
Exactly. They were a staggering 381% more expensive than emissions reduction credits in 2024.
Wow, 381%. That's a massive jump from the previous year too, wasn't it?
It was, up from 245% in 2023. This isn't just a statistical quirk. It's a clear market signal to project developers about where the perceived highest value lies.
Right.
And for buyers, it underscores the sort of reputational premium maybe associated with removals versus reductions right now.
And vintage matters too, like how recently the credit was generated.
Absolutely. Buyers are also paying a hefty premium for credits from recent vintages, generally meaning those generated in the last 5 years. They commanded a 217% premium.
Okay.
This likely reflects a preference for projects using more current, often perceived as more robust, methodologies.
And we've even seen direct measurable impact from the CCP approvals themselves, haven't we?
Yes, that's been fascinating to watch. For instance, in market segments where CCP-approved credits became available, transaction volumes and prices were markedly higher. Landfill gas credits, for example, their average price jumped by 35% after ICVCM approval for relevant methodologies, and volume traded, up 149%.
That's a direct link. Improved trust equals higher price and more trading.
Precisely. It's a tangible consequence of that increased confidence from the market.
Now, this transition, while clearly positive overall, it must come with challenges, right? Especially for older projects.
It absolutely does. It's not all smooth sailing, especially for existing projects that were developed using older methodologies. There's now a clear, sometimes urgent need for them to update and adapt to remain competitive and, frankly, credible in this new landscape.
So set it and forget it is definitely not an option anymore.
Not at all. It highlights that approach just isn't viable. The market standards are evolving rapidly. What was considered perfectly acceptable even just a few years ago might not meet today's integrity benchmarks.
So ultimately, the market's still in transition, still finding its feet in some ways, but the overwhelming direction seems clear.
I think so. The overwhelming sentiment is that strong demand signals, combined with this continued, unwavering focus on quality and market reform, are absolutely fundamental.
Fundamental to increasing trust, driving growth, and ensuring genuine climate impact.
Exactly. And companies relying on voluntary carbon offsets, they're now strategically prioritizing CCP-aligned credits. It's not just a preference anymore. For many, it's becoming a necessity.
Why the shift to necessity?
Well, partly it's crucial for mitigating reputational risks, avoiding accusations, greenwashing.
Right.
And it's also about ensuring their climate actions align with internationally recognized best practices. But there's a flip side. The market is genuinely facing a shortage of these higher integrity credits that companies are increasingly demanding.
So a supply hasn't quite caught up with this new quality-focused demand yet?
Not entirely, which is a critical point. It needs to be addressed through further development of robust, high-quality projects that meet these new standards.
So pulling this all together, what does this really mean for you, our listener? Whether you're a project developer, a corporate buyer, or just someone trying to understand the future of climate action.
Well, the big takeaway is the integrity revolution isn't coming. It's here, right now.
Yeah.
High-quality, high-integrity carbon credits, especially those rigorously verified through principles like the ICVCM CCPs, and crucially, those demonstrating strong co-benefits. They aren't just a nice-to-have anymore.
They're becoming the standard.
They are the undeniable future of the voluntary carbon market.
And this dramatic shift, it reinforces that critical thinking is just essential in this space, isn't it? With so much information flying around.
Absolutely vital. It's about ensuring that your climate action, or the action you support, truly delivers verifiable positive impact for the planet, yes, but also for its communities.
This focus on genuine impact feels vital for actually addressing the climate crisis effectively and maybe finally unlocking the scale of investment that's needed.
We believe so.
Yeah.
And at Aither Group, our Aither Impact Division was actually founded precisely to help navigate this complex, evolving landscape. We provide our clients with the absolute best offsetting solutions, focusing exclusively on those high-quality carbon credits that meet these stringent integrity requirements we've been talking about.
And we have a dedicated team of experts, including engineers who specialize in both nature-based solutions, the ones promoting biodiversity and resilience, and technology-based solutions that generate those tangible community benefits.
That's right. We advise clients looking to develop projects and those looking to trade carbon credits in the voluntary market. We work globally across developed and emerging markets, always with a strong focus on rigorous environmental ambitions and, importantly, robust sustainable development goals, or SDG coverage.
And our project portfolio really reflects that breadth, doesn't it? Spanning everything from improved cook stoves and large-scale reforestation to pioneering plastic removal and regenerative agriculture initiatives.
It does. We cover a wide spectrum.
So if you're interested in supporting or perhaps developing high-integrity projects yourself, projects with high-quality carbon credits and strong SDG alignments, we really invite you to connect with our VCM team.
Absolutely. You can find much more information about our services, and you can easily schedule a call just by visiting the Aither Group website. We are genuinely here to help you navigate this evolving market with confidence, with clarity, and ultimately with impactful results.
Thank you so much for joining us for this Aither Insight. We look forward to our next exploration with you as we continue to track the most important trends shaping our environmental future.
Until next time, stay well informed and keep making an impact.